A good kind of kickoff to our Brunch with Brandon this Saturday, where we're going to spend some time talking a little bit about the new tax bill. And maybe just a little precursor before we jump into the details. I want to make sure it's very clear that this bill has officially passed the House and the Senate, so it's off to Biden's desk for signature and final approval. But as you might imagine, all looks like that should go through. So very, very likely that this comes into effect here shortly, and hence why we're here to share a little bit as far as what this means and some things that you can maybe do to prepare. And maybe before I jump into this current tax bill, what I want to maybe spend a minute on is that, remember, this all stems from a much larger Build Back Better tax bill and plan that had been rolled out a long ways back. And the reason I want to start there is because this is radically different than what had been proposed a long ways back. You might remember before that there was talks about raising the top tax bracket. There was talks about capital gains being raised and dividends to the top to 39.6%, getting rid of the step up in basis for inherited property, corporate tax rate being at 28%. Basically, what I will share is that none of that has taken place in this bill. There is some slight variation of the corporate tax rate, but none of the big changes that were originally rolled out are part of this, which in our view is kind of a good thing. And the reason I say that is that we're in a very difficult time right now in the economy and the markets. And so, as you might imagine, generally speaking, when we look at the markets, when we have raised taxes in a period of uncertainty, it can lead to some very big challenges in the market, at least for the short run anyway. And so what I will share as a little bit of a teaser is that this doesn't really have a whole lot of those negative impacts incorporated into this tax bill, because some of the changes are pretty small. And overall, we don't like to see raised taxes generally in a period of uncertainty because of the consequences to the market, but this really shouldn't have nearly as much of an impact as what was originally proposed a ways back. So just a little bit of insight there. And again, this is not necessarily to say that everything is good or bad, but we're looking at it in terms of how it impacts the economy, and so that's really where we're coming from with this. And again, hopefully share with you how some of these changes may relate to your portfolios and your taxes moving forward. Okay, so let's jump into it here. So the new tax hike is called, what's it called? The Inflation Reduction Act. So that's what we're talking about here. Again, I'm sure you've seen it all over the place in the news. And really what this is again, a much lesser version of this Build Back Better plan. Essentially, it's putting money in place to build up clean energy. It's significantly less than the original 2.2 trillion or so bill. I think this is somewhere around 370 billion. So drastic change from where it was. And it does have basically some spending now, along with some increased taxes that they're hoping will offset the spending moving forward. So as far as what it entails, there's let's say 4 kind of key components to that on the individual side of it. One is, or on the spending side of it, let's say. One is there's clean energy credits have been extended. So, if you are claiming any of that for solar or whatever the case might be, that is extended a little bit. Second is a rebate for electronic vehicles. So for new vehicles, it's a $7,500 rebate that has been extended. For used, I forget the exact number, but it's a smaller figure for used vehicles. ACA, Affordable Care Act premiums have also been, the subsidies, have been extended. So you might remember that was kind of part of all the COVID rollout a couple years back, and that has kind of slipped in here as an extension for some of those subsidies. And then lastly is IRS enforcement. So I think they're putting about $80 billion to the IRS to help enforce basically some of the taxes. You guys probably all know that the IRS has been very understaffed for the last couple of years. And so I think that's what they're trying to accomplish here, is spend a little bit more there to ramp that up so that there's some enforcement in place. To be honest with you, sorry, I think my dog would be tired after the park this morning, but To be honest with you, I'm not exactly sure with the 80 billion figure. Sophie, with the 80 billion figure, how much that will impact things or not. I don't know how much enforcement that does or does not drive. So I'm not really here to comment on that, but I'm here to share with you how this bill may impact you. Again, especially if you're looking at solar or EVs, that's where positively it could impact you. And on the negative side of it, there's really not a lot to individuals, but there is to corporations, okay? So again, really not a lot to individuals, but really the tax and where they're hoping to make up for this spend is on the corporate tax side of the equation. So the first is there's a 15% minimum corporate tax on basically companies that have over $1 billion, over $1 billion on their balance sheets is kind of the rough way that they're looking at it. So that is part of it. But the biggest tax that they're really implementing is a tax on buybacks. So a 1% tax on stock buybacks for companies. This one is important because on the surface, quite honestly, it could have a big impact to your portfolio. This is not necessarily a direct impact to a lot of folks as far as their personal taxes. However, as you might imagine, if companies are not buying back stock, which is a return of shareholder value, generally speaking, that can have an impact on the stock market and on your portfolio. Now, that said, this is obviously an optional tax. Companies do not have to buy back stock. And generally speaking, there are two ways that companies can offer value back to their shareholders. One is buybacks, but the other is dividends. And so although this is a big part of this tax, and in fact where a lot of their figures come from when they say how much tax this should generate, at the end of the day, these companies likely are going to pivot. So instead of not buying back stock, likely what they may do is pay dividends, a higher dividend potentially to their shareholders. Now, that is a big decision on the company's side of it, so don't take that lightly. I'm not saying every company is going to do this, because the benefit of buybacks, of course, for a corporation is they can do it as needed. Generally, and they can change dividends, but generally when a company implements a dividend, they want to stick to it, because if they start changing that towards the downside, that can have a negative impact on their stock price. So generally, they need to be more committed to this if they're going to go that route. But I imagine what we may see in lieu of this tax bill is a lot of companies may shift from these buyback strategies to maybe a higher dividend to their shareholders, ideally creating a similar effect, maybe not to the full extent, but a similar effect to provide value back to the shareholder. And so that's why I'm really not that concerned necessarily about the impacts of this tax bill to the stock market, because I think that generally both sides of these taxes, that there are ways that these corporations can probably just reposition what they're doing, still provide value to the shareholder, and therefore not necessarily see an impact directly to their share price. So these are really the biggest things that we're watching. Remember that this is the name of this bill is around inflation. Quite honestly, I don't know that it's going to have much of an impact on inflation in the grand scheme of things. Obviously, so there's a lot of economists out there that are talking about this, and generally speaking, the general consensus is that there's really not a big impact of this to inflation. If there is, it will take some time for it to carry through. And I think a big part of that from my perspective is that basically we're spending early and then taxing later, right? So it's going to take some time for those taxes to kind of work their way through, and that's why I don't think it's going to have as much of an impact on inflation in the short run anyway. Plus, again, with a lot of these tax changes that were rolled out, I think that corporations will just pivot a little bit and maybe not really see these taxes directly at the end of the day.